The markets fall to the lowest point of the day on the Nifty weekly expiry. Real estate and pharma stocks are under pressure, while capital markets and metals pack are bucking the trend. The US announces a 25% tariffs on countries doing business with Iran. The new tariff threat comes after Donald Trump threatened to intervene militarily if Tehran killed protesters. India is one of the top trading partners with Iran after China, Iraq, UAE and Turkey. And the rice industry could be impacted in India with basmati exports, a meaningful chunk of what India sends to Iran. Large cap IT companies report numbers for the third quarter. TCS is flat after an inline set of results. The management tells CNBC-TV18 that there will be more acquisitions going forward. HCL Tech, though, is having a choppy session despite a good start. Even as earnings were a beat on all fronts, the management is confident of margins being between 18 to 19% in FY27. And Larsen & Toubro is under pressure today after news reports suggest that Kuwait is discussing plans to cancel oil project tenders worth close to $9 billion. Analysts tell CNBC-TV18 that L&T was the lowest bidder in tenders worth more than $4.5 billion of them. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Patakia, and contrary to the recovery that we were seeing in the markets just 24 hours earlier, that recovery is now turned into a bit of a reversal from those higher levels. We opened higher this morning, and since then it's been a bit of a choppy move, but the last 30 minutes it's been a bit of a one-way slide down for the Nifty. 25,630 is where the index now stands. So we most probably have given up 2/3 of what we had recovered from yesterday's low, which was 25,473, and it's a 270 point downtick from the highs of the day. Remember, we closed around 320 points off the lows of the day yesterday, and now we are around 270 points off the day's high. The one index that was holding the Nifty in the green for the first half of the trading session was the Nifty Bank, and that has now given up all of its gains, has moved into the red, and as a result of which it has had an impact on the index as well. There you can see the sharp fall that you have seen on the Nifty Bank. The screen will show you that it's only down 0.1%, but it's a 400 point fall from the highs of the day. Levels of 59,700, 800 is where the index had earlier reached, but now it's back below that 59,500 mark, which was an important level to watch on the index. It pull up the index heavyweights, HDFC Bank, ICICI Bank and SBI. They were the three names that were the ones that were pulling the Nifty Bank higher and resultantly the Nifty as well. HDFC Bank has now moved to the lows of the day as well, as is ICICI Bank. That has been an outperformer that continues to remain in the green, still 1.5% higher on ICICI Bank. So good going for the other index heavyweight other than HDFC Bank. But the other major talking point today has been the big IT results to which these stocks are reacting. TCS kicked off the results season with a steady quarter, but HCL Tech's results were a beat on most parameters. Rima is here with the earnings fine print. Rima.
Thanks so much for that. So for TCS, as you said, largely in line with expectations, no big beat. The company's top line came in at 0.8% quarter-on-quarter in constant currency. They managed to hold on to their profitability as well, margins unchanged at 25.2%. But as Kotak encapsulates it very well, which explains the price action also. Now, FY26 has been a year of growth underperformance for TCS. TCS is taking measures to close the gap with peers. The initial results are encouraging, but for a re-rating, a sustained re-rating, more needs to be done, a sustained execution. Nomura says, and that's on the top line. On the margins, unless we see growth, it's very hard to imagine a very strong margin expansion. HCL Tech, as you rightly pointed out, surprised positively in Q3, revenue growth coming in strong, 4.2%. And also the management in the interaction with CNBC-TV18 said they feel pretty confident about 18 to 19% margins going ahead. But the problem is, as Kotak says, the stock trades at 23 times forward multiple at a premium to peers and therefore fully valued, according to Kotak. AI is growing. It's a very small portion of the IT companies, but it's growing fast. For TCS, annualized AI revenue stand at $1.8 billion. For HCL Tech, AI went up 20% on a quarter-on-quarter basis, and now on a quarterly basis, advanced AI revenues are close to $150 million. Goldman Sachs has inferred from both these results and what it means for the IT sector. They say the results suggest the demand environment is stable to improving, but companies still have limited visibility on the extent of recovery in this calendar year. The BFSI vertical has been strong, and they see a neutral to modestly positive read for the rest of the IT stocks. Back to you.
Rima, thank you for summarizing that for us. HCL Tech still 1% lower, so some choppy moves seen in both of these names, TCS and HCL Tech. Listen in to what the top managements of both of these companies had to say.
Our ambition is to be the world's largest AI-led services company. And we laid out 5 pillars through which we are going to achieve. And one of the pillars about that is how do we play in the larger ecosystem. And we said we are going to be more acquisitive going forward.
We've done very well in the last 2 quarters, and given the strong bookings in the Q2 and Q3, the Q2 Q3 booking is almost 30% higher than in the same period last year. So we are looking at some good uptick in revenue in Q4 in the services, and then of course Q1 as well. So I think given our booking, given our pipeline, and all the momentum that we have, we are looking at a good outcome in the next year. However, anything specific, we will really have to wait for the April meetings.
Just before we move on, pull up 2 names that are dragging towards the lows of the day. One is Dixon Technologies. The stock is now down 5% as we speak. So a very sharp fall seen in Dixon Technologies at a 52-week low now is where the stock is. And the other one that has moved below the mark of 4,000 is Trent. And that too is now down 5.5%. Among the top losers on the index is what Trent is. Dragging the index lower as well. So 5% lower, a very sharp downtick there in the last few minutes for Trent. But the other big headline for the morning was the fact that the Bloomberg Index Services has deferred the inclusion of the Indian government securities in the Bloomberg Global Aggregate Index, citing the need for further evaluation of operational and market infrastructure aspects. Ritu is here with the breakdown of this. Ritu.
That's right, Hormaz. Bloomberg Index Services seems to have deferred the inclusion, the much anticipated inclusion in the Global Aggregate Index. But importantly, it has said the review is still open and it is ongoing. Now, remember, India is currently being evaluated for a potential weighting for around 1% on the index, which could translate into inflows of about $25 billion over 10 months is the estimate, if admitted, of course. So no decision that we've got today, but the Bloomberg Index Services, update did say that they will have an update on the matter by the middle of this calendar year, that is by 2026 mid-year. They also pointed out that there were, some acknowledgements from the market participants that backed India's bond market trajectory and the eventual inclusion in the global investment grade indices, acknowledging some of the progress that has been made, whether that is better market access, the fully accessible route. But at the same time, there are quite a few concerns that it has flagged operational and market infrastructure gaps that still need work. And that includes limited automated trading, the post-trade tax-related settlement delays, etc. And as a result, the review is still open and ongoing. And, we are expecting this update by mid-2026. Bloomberg Index Services also says that the decision on inclusion is going to be announced well in advance and implemented in a phased manner. So there is no disruption in the market, and there'll be a 1-year gap between the announcement and the commencement as well. Now, an important event for the market simply because the inclusion is going to attract foreign inflows. The higher demand for our paper can lower the borrowing cost and also, of course, boost the long-term market liquidity as well. The bond market reacting negatively to the news because most of the participants had actually anticipated the inclusion to be announced this week itself.
Ritu, thank you for summarizing that for us. Take a short break, but before we do that, here's a quick note for our viewers. Get ready for CNBC TV18's all-new lineup in this new year. Incisive analysis, sharp commentary with CNBC TV18's brand new offerings. You can watch our new segment, Cut the Balance Sheet with Manglam and Sonal Bhutra. Watch macro signals with Ritu that isolates the macro forces that actually matter for the day. And finally, stay ahead of the curve with CNBC TV18's most trusted in-house technical experts. Welcome back. Now, in a move aimed at increasing pressure on Tehran amidst the ongoing anti-government protests, US President Donald Trump has said that any country that does business with the country will be subjected to a tariff rate of 25% on any business conducted with the US. CNBC's Dan Murphy is here with the latest updates.
Indeed, well, Ritika, President Trump certainly escalating the pressure on Iran with this new warning, saying that any country that continues to do business with Tehran will be hit with this 25% tariff. Now, this move could ultimately hurt some of Iran's biggest trading partners, including China, of course, which maintains key commercial and energy ties with the Islamic Republic. Iran produces about 3.4 million barrels per day of oil, and about half of all of that is exported to China, according to Kepler. So keep in mind that China would probably be the hardest hit here as a result of these new tariffs. But at the same time as well, there are other trading partners, including the UAE, that could also be caught in the crosshairs. I spoke with the US Undersecretary for Economic Affairs, Jacob Hellberg, on Access Middle East this morning. He says the president is currently weighing options and keeping all options on the table. Listen.
The Iranian regime has neglected its economy, its agriculture, its water, and its electricity in order to squander Iran's vast wealth on terrorist proxies and nuclear weapons research, all the while denying the Iranian people their basic rights. They want and deserve a better life. Ultimately, their future is in the Iranian people's hands. The United States, as President Trump has made clear, will not tolerate massacres in the streets. And ultimately, we're monitoring the situation in Iran very closely and have yet to deliberate on how we're going to respond to events as they unfold in real time.
You heard there a key US official saying the president's still deliberating on exactly what he'll do next. But of course, this tariff threat also comes as Trump says Iran's leaders have actually reached out. They claim they want to negotiate now, even as the president still considers military action here, which he says could come first. Now, it's understood the president will receive another briefing today on the situation as he weighs his options, of course, ranging from economic pressure, including the tariff measures that you've just heard, to full military action as well. Certainly the worst case scenario for risk assets. Meanwhile, on the ground inside Iran, activists say hundreds of people have been killed as security forces move to crush those protests, sparked, of course, by soaring prices and Iran's crashing currency. Internet and phone blackouts have made it really difficult to verify the full scale of the crackdown. But some of the pictures that we've been seeing coming out of Iran over the last 24 to 48 hours have been quite extraordinary. And of course, this is certainly capturing the attention of not just Gulf leaders, but leaders all around the world.
Now, for India, this move could especially affect Indian rice exporters, as Iran is one of the top destinations for Indian basmati rice. In FY25, India exported around 8.5 lakh tons of basmati rice to Iran. Earlier today, we spoke to Akshay Gupta of KRBL and Dev Garg of the Indian Rice Exporters Federation to understand the impact these fresh tariffs would have on the Indian rice exporters. Listen in.
We used to do about 250,000 tons of business only to Iran market, which translated to about $100 million at that point in time, which was about 2018 is what I'm talking about. But business since then, sanctions have, been imposed and business has been constrained more and more over the years. So today our total exposure from KRBL's point of view is about $8 to $10 million, which we manage on a day-to-day basis because of the restricted markets. But we are industry-wise, Iran is a major market for the basmati rice industry. And the sanctions from the US, the 25% tariff from the US is just another, layer on top of the uncertainty. But what was happening in Iran itself was a point of concern for the industry.
Iran is one of the most important markets for Indian exports. Currently, for the last many years, Iran has been the second largest market for Indian rice. And Iran is importing more than 99% of all exports to Iran are of basmati rice. If we talk in terms of numbers, from April till November this year, we have exported goods worth $470 million USD to Iran. That is around 6 lakh metric tons. And if we look at the figures for last year, it was 8,55,000 metric tons, and the total export volume was 880 million USD. So Iran is one of the largest markets for Indian exports. And since this news has come in, we have seen a drastic fall in basmati rice prices in the domestic market.
Let's also now bring in Parikshit on what the Indian government plans to do after this tariff announcement on India's trading partners. Parikshit, over to you.
Well, definitely it would be a setback for Indian exporters. Now, Iran is one of our major trading partners in the region. The total trade with them in FY25 was close to $1.6 to $1.7 billion. We exported close to $1.2 to $1.24 billion worth of products. Largely, this was basmati rice. 61% of our exports to Iran, or roughly $725 million worth of exports, was of basmati rice. And then you have tea, essential oils and fruits as well. So these are the sectors which could be largely impacted if this 25% tariff were to come into effect. Now, at this stage, the Indian government does not have a reaction. Why? First of all, this is a post by Donald Trump on Truth Social that there will be maximum pressure on Iran. Countries trading or doing business with Iran will be slapped with a 25% tariff with immediate effect. Now, putting it on Truth Social is one thing. You have to notify it legally. The USTR will have to put out a statement. The US Customs and Border Control will also have to put out a notification. So these are the points that the Indian government will first watch out for. The exporters will watch out for. And only then will they try and get some sort of clarification from the US government. Having said that, there are 2 or 3 things that we'll have to look at over here. Is whether the 25% tariff that is being threatened, is it for future exports, future business with Iran, or the trade that has already taken place? Number 2, will it be over and above? Will this 25% tariff be over and above the tariffs that the US is already imposing? For example, in the case of India, the US is imposing a 50% tariff. So does this mean it will become 50 plus 25, 75% tariff? No one knows for the moment. Thirdly, whether it's going to be sector, product specific or across the board. That is something, again, we need clarity for. Number 4, very important from a connectivity perspective. India has huge stakes in the region through the Chabahar port, which connects us not just with Iran, but Afghanistan and Central Asia as well. It is a major connectivity project in the region. We had a sanctions waiver given to us by the United States in October last year. That is a 6-month waiver. It exhausts in April. Whether that will be scrapped now or does it stay till April, that is also something that we'll have to wait in for. And I'm assuming that in the next few days, the officials will be seeking clarity from the US government, and the US government too will come out with certain clarifications.
We'll await those clarifications. Parikshit, thank you for that update there. Take a short break, but just a heads up before that, if you're thinking about where the real opportunities lie for 2026, Market Forum, the alpha generators for 2026 is where that conversation begins. The alpha table awaits as you join CNBC TV18 as we host the ultimate confluence of India's market movers. Tune in on the 13th of January, that is today, at 4:30 p.m. onwards, will be on CNBC TV18. Welcome back. On to the latest in the Tata Sons board. Rijik, sources tell us that Neville Tata is likely to be inducted in the Tata Trust's board. Parikshit is back with us with more details on this. Parikshit.
Well, Neville Tata, who is just 32 years old, also the head of Star Bazaar, part of the Trend Group, part of the larger Tata Group as well. He's set to be inducted into Sir Ratan Tata Trust. Now, this is the key trust apart from Dorabji Tata Trust. In November last year, Neville Tata was inducted along with Bhaskar Bhatt into the Sir Dorabji Tata Trust. Now, with this, he will be on both the main groups within the Tata Trust, which control 51% stake in Tata Sons. Now, many say that this was already on the cards. He was a part of Dorabji Tata Trust, and it was assumed he'll become a part of Sir Ratan Tata Trust as well. This is likely to be on the board agenda when the Tata Trust meet this Saturday, the 17th of January. and it will have to be passed unanimously by all board members. Many outsiders don't see a problem to it. How they see it is this, that this could be Noel Tata's way of trying to restore some amount of balance within the Tata Trust after the differences and the exit of Mehli Mistry, which we had seen in 2025. That was a bitter picture in the history of Tata Trust, and we had seen a lot of tensions. So Noel Tata may want to bring some sort of balance and also make sure that he brings people, and there may be more people who will be inducted into Tata Trust this year after the likes of Pramit Zaveri, Darius Kambata. They are also due for reappointment this year. So it remains to be seen whether they will be reappointed or somebody else will come in. And it could be seen as a move by Noel Tata to bring people who are aligned with his thinking as far as how Tata Trust and Tata Sons should function in the years to come.
Parikshit, thank you for that update there. Numbers from ICICI Prudential flashing at the bottom of your screen. The values of new business up 19% from last year, 615 crore compared to 517 crore. VNB margins have seen an expansion compared to last year, almost 320 basis points, 24.4% compared to 21.2% last year. The stock has now moved to the highest point of the day. Good going for ICICI Prudential. We'll get more on this from Yash in just a bit. But for now, prima facie, the numbers appear to be on the higher side compared to last year. Take your leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.